So, hello all. Welcome to the next leading economic indicators to be discussed. That is the Purchasing Managers Index. So, I think this is a very famous indicator which most of you would be knowing. So, this is released on a month-on-month basis. It's basically a survey of the purchasing managers. As the name goes, it is the survey done to purchasing managers. Some questions are asked on certain topics, and the responses give the insights into the health of the particular sector. So, for example, the index is broadly given based on two broad classifications. That is, one is for manufacturing and other is for services. So, when you look at the PMI for manufacturing or services, there are some major 5 indicators which the survey asks for the purchasing managers. So first is a purchasing manager, and in any manufacturing firm or services firm, they are asked questions regarding what is the new orders. So how much is the new order uh, you know the managers have received. So this response itself can reveal crucial insights as to the demand condition, right? So when there are more new orders coming up, so it shows there is a healthy demand condition in the economy with respect to that manufacturing firm. And when these questions spread across all the manufacturing firms, it shows a good level of economic activity in that particular firm. And the same goes for services also. So new orders, this is the first important question. And next is the inventory levels. Now, if the inventory levels are high or low, or same as what it was earlier, so these inventory levels give crucial information about the ongoing supply demand equation, because when the inventory levels are high, there can be a couple of reasons why the inventory levels can be high. So the company might maintain a high inventory level to cater to its production level also. It is foreseeing a high demand, so that's why it's maintaining high inventory levels to cater to the production. Inventory can be from both the ends, right? It can be from the raw material front also, or it can be from the finished goods aspect also. So when there is a high raw material inventory, it shows that this raw material is needed for the production process, and then ultimately to the finished goods, right? So inventory levels being high at the raw material front shows that there is high production, and inventory level being high at the finished goods level also shows that there is high demand, which this finished good is about to cater to in the next leg of the supply chain. So this is the second one, inventory level. The next one is first clear this. So next one is the production. Again, as you can see, all are in a way correlated, right? It is very logically constructed. So production, in simple way, the production is high. Again, there is a good demand condition. If the production is low, then you can obviously tell that there is very less demand condition. It's very straightforward production level. Next is supplier deliveries. So supplier deliveries is something like I would like to explain this through an example. So it's like, for a firm there may be multiple suppliers, right? So let me take an example of for example, consider a tire manufacturer. So this tire manufacturer actually would cater his tires to various automobile companies. Like, for example, you can consider Maruti, you can consider Maruti as the first OEM, or you can consider something like Hyundai, or you can consider Tata Motors. So this tire is a common raw material or an input to all the automobiles. So tire becomes the supplier in this particular example. So this supplier, is he taking more time to deliver the uh, product, which is the tire in this case, to the automobile? So if he's taking more time, what does this mean? It simply means that he has more orders. Now, why does he have more orders? He has more orders because the demand is high from all the three automobiles, right? So this is how this supply deliveries in terms of the time taken, how much time are the suppliers taking to deliver their products to their respective customers. If they're taking more time, it means they have more customers. more demand from the customers, to be precise, and that gives the clue that the economy is doing well. So that's about the supplier deliveries and in general the employment environment. So if the employment situation is good, if they are hiring more people, if they are as we discussed in the earlier part, that the average weekly working hours, that is more, again, that aspects are correlated here. So that is also a good indication of the uh, health of the overall economy. So broadly, these 5 questions are asked to the purchasing managers. Very relevant, very dynamic questions, which the managers answer from a month-on-month basis, based on whatever dynamic condition is taking place. And the response from the purchasing managers can be either, if you just broadly look at these 5, it can be either increasing or decreasing, right? So either the new orders are increasing or the new orders are decreasing. The inventory levels are high or low. The production is increasing or decreasing, right? So when you get such responses and they're, noted, the PMI, the firm which does the survey, it gives a weighted average to these 5 components and releases the survey, which we can see simply in terms of the numbers, right? So now the PMI numbers, you can see that every month on month we get this number in the economic calendar. You can look at it. So the PMI, if consider this is a 50 is the base level. So if the PMI number is above 50, it indicates there is expansion in the, so it means there is an increase in any of these or all of these, right? Which in turn tells that the demand and the health of the economy is pretty good. And if it is below 50, it shows there is some contraction taking place. There is a lack of demand and things like that. So this is about the PMI interpretation of the values. Very simple to interpret, nothing complex. They've made it a very simple index for, and in fact most useful things are simple. And moving about the next part of it, just a minute, right? So now just completing the explanation on the PMI before we go into the practical utility of it. So we can see that as we are discussing, it's a leading indicator because it is giving us the probable demand conditions which the purchasing managers are foreseeing, right? It gives a glimpse into the economic future, and that is why this is a closely watched indicator by economists, investors, and business decision makers. So it can give signal to the start of new trends, and I'll explain with charts and data how this can be very helpful. And then of course, as we are discussing it on the market sentiment, for example, if there are strong PMI figures, it obviously indicates there is expansionary phase, there is increase in orders, there is increase in inventory production, and supply delivery is taking more time, which is again boosting market confidence, which leads to gains in stock market, as we are seeing right now also. And then the weak PMI figures shows contraction, again leading to some kind of pessimism, and which can affect the markets. And sometimes if the contraction prolongs, it can lead to recessionary tendencies and a sell-off in the equity markets. And of course, when we look at the PMI, every country has its own methodology, but the larger concept remains the same. The core concept, as we are discussing, they might slightly vary from one country to another, but the core concept remains same. See why it might vary from one country to another, because when we talk about PMI, we're talking about services and manufacturing, right? So if you take US as an example, US is broadly a service-based economy, right? But China, if you consider, China is a manufacturing based economy. So there may be some slight variation with respect to that, the nature of the economy itself. So if, for example, if US is service dominant economy, we should focus more on the PMI of the services in the US. But China, we have to look at the PMI of manufacturing more. Of course, not to say that the other has to be ignored, right? It's about giving the larger weightage to the nature of the economy in itself. So that is about the PMI basics. Now let's look at the PMI data and how realistic or leading it has been in identifying the strength of the economy. So first, let me start with the example of the US services PMI. So this I've taken the you can just Google services PMI, and from this website tradingeconomics.com, you'll get the historical PMI trend. So first, let me look at the first 1 yearly trend. As you can see from the past 1 year, just okay, let me see the past 5 years, because that will give a good gauge. You can see that this is the prior to COVID period, the line 50, this is the 50 mark. Because as you can see, this is the 50 line. If it is above 50, we have discussed that it is expansionary. If it's below 50, we have discussed it's contractionary, right? So once the COVID started and the lockdown started to kick in, we could see the contraction in the economic activity, and accordingly the PMI started to slip, right? We can see that this January, February, and March, the economic activity slipped, and accordingly, when you look at the charts, also it's very much explanatory that I'm using the chart of S&P 500 here. So S&P 500 also, this is again the same period which we are focusing. This is weekly chart of S&P 500, right? So the S&P 500, we could see a drastic, sell-off in the markets, right? Why is sell-off happens? It's very simple. The economy is contracted because of lockdown, and there is no growth. So when there's no growth, the stock market doesn't grow. It is futuristic in nature. It's forward looking. So when there's no growth, there is no growth in the stock markets, right? So you can see that there was a brutal sell-off because of the black swan event of COVID. And interestingly, you can see that once these services PMI start to pick up, right? You can see in the month of probably April, May, the services PMI start to increase. And yeah, let me make this a line chart. Yes, you can see that the services PMI, once it started to increase, it was rapid. The comeback was very fierce, and once it crossed 50, it shows expansion. So the expansion continued, and in a way, it hit this peak of 70. You can see that the services PMI hit the peak of 70, right? It is a massive, period of fast growth, you can say. So because of the stimulus from the central banks, governments, you can name any factor, but the PMI is indicating that yes, there is a growth in whatever we have discussed. The new orders, the inventory levels, the production, everything just boomed, and accordingly, you can see that the S&P chart, we witnessed a fantastic bull rally in this S&P 500. You can see this is that period from 2020 April to the end of 2021 almost. So this was one this thing, right? And then the first phase, and then when you look at post this period, the PMI started to drop. Now, since it has become a kind of overheated situation, the economy can no more expand at this fast pace. It's pretty obvious. So the PMI started to slip and started to slowly come down. The trend is most important. So, and then once it slipped below 50, it is again trying to show signs of contraction, right? So you can see this phase particularly. So that this almost from the 2021 latter part till the 2022, mid to latter part, you can say that there's a declining trend in the PMI of these services, right? And accordingly, you can see that on the markets also, the PMI is indicating the same aspect, that the market started to respond to this nature, that yes, the economy is slowing down. Markets also kind of slow down in this particular period, and they kind of went into the mini downward trend, you can say, making lower highs, lower lows structure, and they continue. But again, as you know how dynamic it can be, the services PMI started to increase again. So you can see that after hitting this low somewhere around, I think this is to be precise on this number. So you can see that this is somewhere around, I guess, 45 or something, right? So the PMI started to increase again, right? Once the trend sets in, that's why this is a trend indicator also in one sense, that once the PMI starts to increase, it continues for a couple of months. That is when the positional players or the swing traders, they can hold their positions during this particular period when such a trend sets in. So this PMI again started to increase, and you can see that the market's also kind of responding to in a similar way to this trend, right? So now when we look at the latest scenario, let's just look at it from the 1 year perspective. to understand. So for example, when you look at the chart on a PMI on this yearly time frame, you can see that from January, the PMI, yes, it was less, but it was coming up, right? That's the most important part. The PMI was increasing. This is the 50 mark, and the trend is what the people look at. Once there's a significant jump here, it gives a signal to the investors, the business, policymaker, that yes, this jump doesn't happen for a reason, right? There's a strong impulse in the economy. And then I could see once it jumped from less than 50 to above 50, it's in a strong expansion, and it continued for a couple of months. And accordingly, you can see that on the charts also, we could see some good rally which took place in this early part of the year, both in actually S&P 500 and the Nasdaq. Right, from the January, you can see from Jan to whatever we're discussing, we saw a good rally. This is a weekly chart, mind you, that this is the fantastic rally also we witnessed. And post that, the PMI started to again drop, and but still it is not contracting. Again, it's trying to increase. So this is how PMI in a way helps us to understand the strength of the economy. Now think that the PMI again is starting to go up now, from the previous to now the next PMI number also, if it is stronger one, then it gives a healthy picture that the rally which we are seeing in the S&P 500 can further continue. It can almost take out the earlier highs of 2021, and it can go up because Nifty has already taken out the highs, but S&P 500 has not yet. So this is the simple reason why it has not yet done so. So that's what I'm trying to explain. And now we can see that the S&P 500 is again back to whatever highs it was in July, because the economy is no more contracting. It's a simple explanation. Now the same when we look at Indian services PMI also, you can see that this is a bit different when you compare to the American chart, and that's why our Nifty chart is also a bit different, right? Every country is unique, every economy is unique. So, but broadly they are similar. So you can see that the same COVID scenario, again, we bounce back pretty well, and then the 50 mark somewhere here, and post that our economy is always in an expansionary mode. Our services PMI has always been more than a 50, and accordingly you can see that the same if I have to apply to the Nifty chart. Just a minute. So let me put on Nifty on the weekly time frame. You can see very clearly that our Nifty chart has performed even much better than the S&P 500, and we have in fact crossed the highs and hit the 20K mark also. But the S&P 500 has not yet crossed because US economy showed some signs of weakness, unlike our economy. So from the COVID lows to high, we're almost there, right? Just observe how this chart is almost, the pattern is almost similar to the services PMI trend, right? You can see that the services PMI is also the same thing. We bounce back and we are kind of doing the same thing. So it's the same thing which is reflected on the charts. So till we don't get below 50 and the economy doesn't contract, you cannot expect a correction in the markets. This is very simple leading indicator which uh, signals the health of the economy, the strength of the economy. So as of now, the economy is very strong, and just try to observe and on a year-on-year basis also, we can see that we are consistently above 50, right? All this is expansionary. There may be ups and downs in this, but it is above 50. It is expansionary in nature. So, but when you look at when you look at it from a 5-year perspective, you can see that here we are trying to see some kind of in this range, we are trying to see some kind of stagnation, right? So that is the broad thing, and accordingly the market is stagnant. So you must see the trends in such simple ways and try to decode. So again, now if we come back and scale or increase start to go up in terms of the PMI, it's obvious that the markets would indicate a good rally. So this is what the PMI simply indicates through its weighted average, and anything above 50 is expansionary. So yes, we are expanding, we continue to expand, but the pace of expansion has slowed down, and accordingly the market has also slowed down, is going into consolidation. So once and you should also correlate this with the interest rate cycle which we are in. We are at the peak of the interest rate cycle. So once the interest rate starts to cut, these would receive a significant boost in terms of the activity and things like that, and the PMI would obviously start to increase. So this is about how PMI serves as a simple tool to gauge the overall health, and that's why it's a very significant, leading indicator for many countries, for the world in general. So yeah, that's it for this leading indicator PMI, which is very useful. It comes on a month-on-month basis. Do track it on a month-on-month basis and know the trend of it to get the to benefit out of this from be an investor's point of view or a trader's point of view, or any policymaker who's seeing this, right? So that's it for this video. Hope it was helpful. Thank you.